Good evening, everyone. Once again, I hope you are well. And tonight's lesson will be a continuation of the last lesson we had last week. It was a recumulation. I hope you learned a lot from that lesson and especially the phase we had. Right now, this is the USD currency pair, which is quite popular due to its small spread, but also strong liquidity, and it is traded very often and belongs to the most popular pairs. As you can see, sometimes the spread is even 0.0, which means that at a particular moment there is a price for the Brokvichka house and it does not exist. However, mostly in the institutional zones, there is a very large spread, and that is what should happen right here. But judging by this picture, it is now 19 hours later, and the NYSE algorithm is always an indicator of different volatility, different fronts, sometimes not always, as well as different volatility sometimes, but mostly it is more often that it is wrong. And that's why they always trade in the period between, let's say, 10 in the morning or 11 in the morning until 4 in the afternoon or half past 5. It is afternoon at the latest if that algorithm. So we can expand that a bit and say that from 10 in the morning until half past 5 during the day, it is most valid to follow the markets, both because of the front and because of other events. Of course, you will recognize all this through trading and your work over time, especially when you see the news that is waiting at which moments. And since I said that I record the lessons and that they will always be posted, a significantly smaller number of people will attend the live lessons. And so as the months pass, let's say smaller and smaller numbers will always attend. Let's say maybe half will attend, half won't, with the fact that people are much more relaxed when the lessons are recorded. However, this does not work for people when the lessons are recorded, but unfortunately they have to. Why? For some, not for all. Because most people don't want to end up, let's say, time passing quickly. People are generally not that disciplined, and then in the end, they don't watch the lessons as the weeks go by, and that's why it's good to watch it live. So we will continue to work with reaccumulation. It is a very extensive topic. It requires quality work. And as you know, the stock market is a business that is a long-term business. I can translate since there may be someone who does not understand, because we will use a lot, let's say those foreign names are already known, but I will always translate them so that it is the clearest, so that the bigger picture of the plan that will be built later in the course of your trade, it is the most important. Why am I saying that? Here, for example, when you look at my year 2023, which was so far calculating a little bit worse compared to the previous year in terms of profitability, but much better as far as more orders in the prop firm are concerned. And maybe it's that we say out of some caution, but when you look at it, of course, there is a whole month that is ultimately not profitable. And then if people observe one day, and if one day is important to them, they make a big mistake. Now I'm going to pump this up as I explain it. So never focus on one day or on that short process, but always see that it is much longer and that your plan that you have built is on long distances and that it is not the profitability that you want it to be, but what it can be. So if profitability has to be, say, 7 fast in your mind, then it is not good because you are chasing profitability. Therefore, it is necessary to wait for the algorithm as it is displayed. Sometimes it will be 7% in a month, sometimes it will be minus 2%, then the next month it will be plus 9%, then the next month it will be 1%, and maybe the next 2 months it will be minus 1%. So imagine a person who does not have a well-constructed plan, how he loses 2 months, how he feels in those situations, how he thinks, and it will affect everyone. So it is impossible to understand it like this at the start. Here, I will now draw the basic scheme of birth accumulation. That is what we have been doing, a classic consolidation in the cry, and after that we expect a potential trend and buying in this area. So now we will base ourselves on certain rules. Come on, now you can write the reaccumulation tags yourself in the chat as we used to do. So, by stages. Here, I will draw the stages. Someone can write in the order in which they are marked. Yes, exactly. Preliminary support, buying climax, secondary test. Later, the uptrend does not continue, but the downtrend continues, and then the market slows down in that part of the previous imbalance. The secondary test must always be impulsive. So whenever we see a secondary test in this part of the distribution, it has to be impulsive. I assume that you already know, or maybe you don't know, but now we will write it down here. So the secondary test must be impulsive and contain an imbalance, an incomplete order. It's a very important part, and I expect you to pay for it. You will often see that the secondary test is not impulsive, but rather a complete order in it. So let's see it this way. And then such a secondary test will not be valid. And why is that so? What do you think? Let's try to concentrate and think about why this secondary test in reaccumulation must always be impulsive. We mentioned that once. That mention of mine lasted maybe 10 seconds. So if he watched the lesson more than once, he might have managed to remember it. But why does the secondary test always weigh on impulsivity? That's right, because of redistribution. Right, because of UT. Why is there always an impulse here? Because this order block is a preliminary support from this previous distribution. So we haven't talked about it too much, but here we are now. This part here that we don't see, right? It contained an uptrend, impulsive, and then a preliminary support began to form. After it, the buying climax begins to form, which we will now mark. And then we will see a trend that is not impulsive after the buying climax. However, you tell me now in the chat, if this buying climax here is impulsive, i.e., sorry, not impulsive, but starting with a downtrend. So this buying climax is the highest level, right? So after it, there is no higher level except for the moment when that buying climax is transferred impulsively and we expect that take profit. It is the highest level there is, buying the pinnacle in pulver accumulation. Now, yes, since this is the highest level, when we monitor the distribution, what will the highest level be? You can write to me. So usually when there is distribution, what is the highest level? There are two different top levels. Yes, UT, then UT. I asked a lot of questions. So after the lesson, I will look at everything you wrote down in the chat, since this chat remains saved for me. And then I will write down approximately which one was the most active, although I don't judge only by that because I have a lot of messages from you on Viber, and then I judge the current one the most knowledge. Exactly. That means when the distribution is formed, the highest level is UT and UT. Now, this fractal, when we look at it, this is reaccumulation, and it's perfect with these shopping highlights. Buying peak, the name buying peak was born from reaccumulation. That's an interesting fact. So when you look at the distribution, it looks like this. And we will mark this part as a shopping highlight. However, just like that, well done, he wrote beautifully. Well, he wrote this beautifully. I was going to explain that, but now I will start gradually. So when we look at the distribution, we will see that the main climax is that buying peak. However, the question is next, what is it called, the buying peak, and how much later is there a UT? Why would it be a buying peak if later we will see this downtrend and the highest level called UT or yesterday? This is because this reaccumulation, important, this Bain climax is called Bain climax because of this here order block, not because of this order block. However, it happens if such a fractal is formed, we will later combine it all into one order block called Y. But initially, we could not know that impulses will arise here. The previous valid order block will become, which will look like this. So we did not know that there would be such an order block. We did not know that it would become a structure, that it would become a fractal. that it would become a Y, and that it would become a fractal of order blocks. We couldn't know that in this area here, except if a valid reaccumulation is formed. And we need to have tags for valid reaccumulation. And the mark is that this part is the buying peak in this here order block, which means that an uptrust is formed later. It is the part in the distribution that forms a valid distribution fractal in the narrower picture. Distribution will be valid only if there is a horror image, and every VICO is valid to trade only when the horror image is valid. Write to me in the chat, what is the horror picture? So how do I define horror? There is a horror image as a title, and then it goes under the horror title. So what is in the horror? What defines it all? So that in the end we would have the validity to enter the trade. So first it starts with the structure of the market. How is it going? Okay, a valid order block, which means that it must be impulsive and that it must first contain a complete order and then an incomplete one. So first there must be a market structure, an uptrend, previous order block, which means that the previous order block must be valid. How? Selling in an order block must be a complete order. Buying after an order block must be an incomplete order. Structure, order block, then fractal order block and structure just like that. So the fractal of this part of the order block and this structural part that we see here must be equal. What it means, now I will describe it. So if we see that the fractal structure is invalid, what will it look like? It will look like this. So this structural part has been bought a lot, which means that we cannot expect to reach the previous order block. Why? Because probably if that previous order block is reached, then the fractal of this order block will be invalid. And then it is the uptrend structure is fractally invalid and the order block is also invalid in one. The next order block could be valid, let's say like this, in terms of the fractal of this order block and this order block, but that previous order block would not be reached. So that is the validity of fractal order block size and market structure. Let's see further. Wyckoff, yes, exactly. So we have to see that there is a completely valid Wyckoff trade. Let it be for now the accumulation of the simplest trade as preliminary support, selling climax, secondary test, sign-off strength, and secondary test phase B, which later forms an uptrend. Now, in this order block that you see here, everything has its own, and all this must be known. Why, what is formed, how it should be formed, how every possible trend should look like. This downtrend, this uptrend, this downtrend, then this uptrend, then this downtrend, then this uptrend, then this downtrend. Everything has all the explanation in this part. We are doing the basics for now, just what the sketch should look like. And that's why the university lasts a long time, and that's why the knowledge is quite complex and massive. But in the end, when everything is learned, when you look, your knowledge that you have, that you will not be so important next to that discipline. But that's how it is, and that's why it's quite difficult. Because in general, if you make 1% on a $50,000 order, you wouldn't make such a percentage in a prop firm on $1 million order, and you would have a much higher profit. So the thing is mostly about the psyche. Yes, so it exists in ICOF, and then, as you wrote, there must be a fractal order of blocks. There is a fractal order block here, and all the order blocks we see are valid. How do we measure the fractal order of blocks? We have to visually see that they are equal, which means what? The selling climax must not look like this, right? Therefore, the secondary test should then look like this, and then this trade would bring a profit of more than 1.8%, and such a trade would not be valid because the accumulation must not offer more than 1.8% profit. Preliminary support is an exception. It may have a different fractal, so the preliminary support can have a different fractal while these other order blocks cannot, which means that the preliminary support must have a fractal like this, for example, and a fractal like this, for example. For example, if I were to start writing this down, it would be useless because we would have stayed for a very long time. The best way to learn this way through experience is to write down and watch the lesson several times. To make it an audiobook, not just writing it down, which means that this preliminary support can have this fractal or this fractal. Now I'm going to say that, but it's like I'm writing down so that what I say will be written down. Preliminary support must not have a larger fractal, but it can have a smaller fractal. So the preliminary support must have an equal fractal or a smaller fractal, but it must not have a larger fractal. Let's put it this way. So it must have a smaller fractal, a medium fractal. It must not have a large fractal. There is no selling climax in this accumulation rule, whether it will reach this highest level that we see here, or will it reach the middle of this here order block, must not reach. That part of the previous order block from where it starts to be offered to us, when I enter the secondary testing phase B more than 1.8 posts, which means that you must not reach, say, this part here with the selling climax. You can measure that based on the placement of this risk order and see that if this part is reached, it will be 1.87 post. We used to have a rule in education that it should not exceed 2%, but education has evolved a lot, and now I have reduced it to 1.8 because experience and measurement and statistics have determined that 1.8 post ultimately contributes to the greatest, highest quality work. So selling climax, I say again, let's make this an audiobook. Yes. We would not write it down here because this lesson can be viewed many times, and anyone who watches this YouTube video can now stop and slow down the video and read it, i.e. to listen and finally write it down himself. There are a lot of rules, and then we have to work like that. Selling climax must be reached any level in the previous order block. It can be this level, it can be this level, it can be this, it just can't be 1.8 posts. The question you will ask me is the following. When it comes to accumulation, it means classic trade accumulation. Whether the selling climax that we will show it here, does it have to reach the previous order block? Does not have to. So if we see that this is the previous order block that has a valid fractal, and then we see that there is an uptrend, accumulation is starting to form. This will be preliminary support. This will be selling climax. Look, so it does not reach the previous order block. It is on this imbalance among these two order blocks. A secondary test is formed, which will later continue the trend. So feel free to listen to this now that I'm saying this lesson is recorded and can be played back. You don't have to write it down now. Then go back, then write it down so you don't get there and so on, just to check if it's being recorded. What matters is when there is an accumulation that is formed, so that the selling climax does not reach the previous order block, and later we see that there is a secondary testing phase B that must reach this order block. It will be a valid trade. In which case, there must be a sign of strength. There must be a valid fractal preliminary support, and the secondary testing phase B must reach the previous order block, at least at this highest liquidity. So let's write this part down since it's a bit complex. If the accumulation is formed above the previous order block, which is usual, so it will always be formed above the previous order block, and the selling climax does not reach the previous order block, that means that accumulation of C So I'm saying all this from the top of my head so that no one thinks that I've already written it down, that I've written down these rules, established them, and so on. It's a pure experience. This means that the accumulation of C form a valid and preliminary support, selling climax. Secondary test, we have to see sign of strength. And the secondary test on case B must reach the previous order block, at least the highest level. The image is certainly complete, must be valid. So the horror picture must be completely valid if it can be seen. The fractal must not be changed, that is, if it happens. And that's a little difficult since these are now the rules we are working on, and I won't speak too quickly now because there is no need. This means that this is more of a marathon, this work. And then I will speak a little slower so you can understand me better. The previous order block must definitely be reached, but the fractal must still be 1. There shouldn't be much difference in the fractal regardless of moving the climax above this previous high. There must not be a different fractal in the preliminary support as you see here. So the preliminary support must not have either a smaller fractal or a larger fractal. In this case here, must be an exact fractal, and the secondary testing case B must reach the previous order block, which means that we will enter the trade right where, not at the transmission of Selim climax, but at the highest level of the previous order block. Now we'll write it down here. So in this case, the purchase of currency is based on the transfer of Selim climax, but in part until the previous level of the highest order block is reached. It's this part right here. And this is a very high quality trade and quite, shall we say, a special form, especially when it comes to the stock market. Because I say when I trade the stock market, I risk between 3 and 4.5% per trade. Given that I trade the stock market on my account on EdCap, where I invested quite a lot of capital a few months ago, and this, at the beginning, I put in over 100,000 euros, since EdCap is in euros, not in dollars, which means it's not a prop firm, it's my personal account where I don't have to worry about, as a prop firm, that it has to be 1% per trade or 1.5% per trade or 0.8% per trade, which is also great. However, there is a drawdown limit, which is 10%, whereas if I trade an account in a brokerage house, I am much more relaxed through those rules because I create all those rules. And then the risk does not need to be less than 3% when you have an account in your brokerage house and you are already trading professionally. Why? Because it's pure math. It has a bit of psyche, but it's pure math after more experience. The experience is as follows. That's math, sorry, next. And that is that if you trade in a prop company for a year, and in general, when you consider the months, it doesn't have to be one whole year, but let's count 12 months in 1 year. The way we put each month as an average so that it's monthly, roughly, I would say in English, but I'll to express in our language so that it would be clearer and more understandable so that I do not enter terms that will be unclear to someone after the lesson. Just to look at the company. Of course, that's right. So that's math. However, I will now state another notion of mathematics in relation to the one written by Silvio, but it is also another part of mathematics. 3% or 4.5% if the accumulation is in question. Percentage by volume of trade profit. So not by the amount of percentage profit in the month, whether it is 7 posts, whether it is 8 posts, and so on, but the percentage by the profit of the amount of trades. which means that if I have 10 trades on average, let's say in a month, since it's usually more trades, but trading the stock market, it's about 5 trades or 4 trades a month. Sometimes it's 7, 8 trades. Since that is how the ICOF offers. About every 10 trades, there will be 7 or 8 profitable trades, while 2 will be losing trades. For example, judging by the last 90 days, I haven't had a single losing trade in the stock market, except risking, say, 3%, so I lose not 3%, but 1% because I exit the trade on time. We will also do that as we works, or I exit the trade at 1.5% loss, or exit at 0.8 or set break even and so on. But mostly it will be a pure profit, so that out of 7, that's 110 trades. Out of opportunity 7, it will be a pure profit. And then there's no reason for me to trade below 3% risk in a brokerage account, but there's a big reason in a prop firm. Why? Because they are prop firms trading Forex, and because there are 10% drugs online. They are 2 completely different jobs. So, yeah, what I just told you about the brokerage house and about the prop firm, it's like I said, let's say about Silvio, after I sent a message and it occurred to me that he practices medicine, he's a doctor, so he has his own profession. And let's say Zlatko does something else. Let's say he's a pilot, which means that it has nothing to do with it. There is no connection, but there is something similar. There is a similar that it takes a strong psyche, built a strong psyche, built confidence in their job, and a lot of simulations that they had to have in order to finally know that they can really do the job. So, for example, if Silvio is a doctor, that means he has finished medicine. He must have certain simulations, say in surgery, so that he can later do live work. Like Zlatko, for example, if he is a pilot, he had to have simulations. Likewise, when it comes to learning, there must be a simulation on the market, on the demonology, in order to ultimately create profitability. The simulation of trading a personal account in a brokerage house and trading a prop firm is very different, so it is not similar. The only thing that binds them is the same algorithm. There is nothing else. Everything else is quite different, so they are completely 2 different jobs. Now, don't like the brokerage account more because you can risk more, so you will earn more, etc. Why? Because that's not part of the plan. Part of the correct plan in order to really achieve success, especially if you don't already have huge financier funds, and better, because someone might have already invested in a brokerage house and lost. There must be such a plan where you will build profitability based on such trades by simulation. Later, for months, build profitability on the basis of, for example, trading with a demonologist or trading, for example, in a prop firm with some smaller order where you are allowed to lose, for example, that it be from 20,000, and later, after the statistics of your profitability are guaranteed to be extracted, you can enter the biggest account in the prop firm anyway, because you have statistics for 12 months where you make a profit every month, except for, say, 3 or 4 months where you may not have made a profit. That minus was allowed like -1, -2%, and the other months were +7, +6, +8%. And then you start with an account. You can do it after 4 months, not necessarily after 12. And then you start with an account that is, say, 200,000 or $400,000, where you start to profit. And then with those raised funds, and after 2 years of raised funds, and after success, 2 years of success, only then you can be ready to really invest in a brokerage house and then have a prop firm and a brokerage house this account. How you could trade 2 accounts and profit a little better on this second account because you have different rules, a different type of business. The stock market is traded, while here in prop firms, Forex is more often traded. Forex loses a little more often compared to the stock market. So by trading the stock market, we will profit more times in Wyckoff. Why is it so? Because of intraday trading, because it affects Wyckoff, often London session, New York session. reaching the previous liquidity that is forgotten in Wyckoff, but only targets that previous liquidity, while the stock market trades volume and liquidity, generally much larger time frame. And then in Wyckoff, it has a bigger impact because that longer consolidation in Wyckoff, it generally looks like this. In Wyckoff, it mostly looks like this one way. And then the volume is collected in one area in order to form a trend later. And it is quite often a gain when it comes to the stock market. So out of 10 trades, it can be 9 profitable trades. While, for example, in Forex, it can be 7 or 6 or 7 or 8 winning trades. There are no rules, but in Forex, you lose more, but there are more trades. And then all that, when it is finally calculated, there will be similar profitability. There will be similar profitability in the company, but Forex is much harder for the psyche compared to the stock market. For the most part, it means that people today, let's say 7 and 1 o'clock, follow the market and follow it until 4 o'clock. Imagine a beginner who, for example, will trade this kind of trade and he doesn't see it all day today. And here's the reason why he doesn't see it, because he's a beginner at the beginning, because he still doesn't have the built-up experience to clearly discern it with his eyes. And then let's say a month passes and he sees quite a few trads and then he wonders where he went wrong, why he worked there. But it is impossible to influence that on himself because it is difficult not to make a profit for a month, especially if you are a beginner and you have that ambition. Because every job that the man was taught that way a long time ago, I won't talk too much about it now, but every job that is not in the system, mostly he lost a lot of times to win in the end. Everything you do today related to the university always has a happy ending. Pass the exam, happy ending, great. Finish the exam, get a job again, happy ending, maybe succeed once or twice. Do something basic that is easy, that everyone can do, always has a happy ending. But when it comes to business, it's quite different and it's hard to be an innovator. And many times one loses, many more times one loses in order to achieve success in the end. So that something that is out of the system and out of our blood by evolving hundreds of years ago means people were constantly learning those rules, and it evolved in people that it is simply not easy to avoid and move to another work system. So as far as this accumulation is concerned, it is important to remember that the selling climax does not have to reach the precortical order block, but it must not reach the precortical order block in order to end up with over 1.8% profit. That is very important. Secondary test must have a clear fractal. The secondary test must not have a fractal like this. It must not have a fractal like this. It must not have a fractal like this. It means it must not have a fractal like this. It must have a completely clear fractal. There is no rule whether the secondary test must reach the close, whether it must reach 80%, whether it must reach 70%, 50%, it must not reach. A fractal that is incomprehensible to us. It must never transmit the precortical lowest level. It is important it can be close. There is no rule whether it is better if the lowest level is close in this part or in this here part. There is no rule the same when it is like this and when it is like this. So the risk of such a trade will be 0.8% in prop company if you see it, and in the end you will profit 1.70% in it. We will now return to the reaccumulation we drew in this section and explain the following. Reaccumulation has 2 stages, that is 2 basic phases and 7 detailed phases. 2 basic phases, that will be the first half, which is distribution. That is this part called preliminary support. Is that right? Buying climax, second test. It is the first basic phase. So if we measure those basics, the first hole, we can say the hole, while the second hole will be accumulation. Follow me now next. The first stage, we do not monitor reaccumulation on a smaller time frame. We follow the second phase of reaccumulation, which is actually accumulation on a smaller time frame. So we do not monitor the first phase of this accumulation on a smaller time frame. We monitor the second phase of this reaccumulation on a smaller time frame. What do we track? What part do we track? We follow the consolidation and the cry. Right like that. And this is Zlatko, who wrote earlier that he is a preliminary supporter. He noticed that quite well, so congratulations on that. So we follow consolidation, we follow CRY, we follow MB, which may or may not be here, and we follow reinvestment in rights, which may or may not be here. Must. What does it mean, can't and can't? If I enter a trade here and we risk 0.5% in this trade reaccumulation, why would we risk 0.5%? Because there is a CRY here that has no reaccumulation in it. And it has no accumulation. So cry to yourself, there is no reaccumulation, which means there would be 0.5 post risk here. I will talk about that further. So the only order blocks that we risk here are, which we follow on a smaller time frame, are consolidation, CRY, MB, and phase E. We don't have to follow on a smaller time frame this, but see on that same time frame on which we see all these order blocks, and that is this first part of the distribution. Move on. There are three types of CRYs. So I hope you remember this since you can watch the lesson again. So don't worry. There are three types of CRYs. The first kind of CRY, so reaccumulation, that's the first part of the CRY. That's the first property of what the CRY may look like. Accumulation is another way of forming a CRY. And the third way of forming a CRY is classic consolidation. Now we will imagine that this is a CRY. What I am drawing now is a CRY. So all that is over, and now we expect a CRY for consolidation. There must be preliminary support, ortak or buying climax, secondary test and consolidation, and later the scream again. Which means what? This CRY here that we now see, it is exactly the same picture as the reaccumulation we follow. So it is exactly the same broader picture that we are following. We follow the same picture, only wider. And then in the CRY, we literally expect you to place a mirror, and then in front of that mirror to place a mirror. So it's in the air. There's a bigger picture called reaccumulation, and then eventually we expect to see a scream. But the scream ends up looking like this. Look at this. Exactly the same as the whole picture of reaccumulation. And where would we enter the trade? What do you think? Here or here? But we will always enter trades on a consolidation, not on a CRY, and that is the difference between the CRY and the pure image of reaccumulation. So now we'll write it down here. So if the CRY contains reaccumulation, as usual, we will not enter into trade in CRY, but in the consolidation of the reaccumulation of that CRY. So we will not do as usual to enter the trade, considering that this is all a CRY now. We will already trade at the lowest level of consolidation. On occasion, we'll place a 60% retracement of the previous low as this consolidation forms, and the stop loss will be at the lowest level of the previous consolidation as usual. So we will work there like this. This will be preliminary support. This will be a buying climax. This will be a secondary test. This will be consolidation, and then this will be a CRY, which means that we in trade will trade directly during the formation of this consolidation. Yes, that's right. So this is like the risk of such a trade in the firm's trials will be as follows. from 1.2% to 1.5 fast. Usually such a trade is 2%. If we see a trade like this, it's usually 2 post-profit or more than 2 post-profit or 1.8 post-profit or 1.7 post-profit. And what you see here is one from the highest quality trades to the top 10 highest quality trades that you will have in your Forex career. So this trade that you see here in front of you is a trade that has been sharpened and undermined many confirmations. This is a smaller picture in the bigger picture. And such a trade involves a lot of risk, and in the end, a lot of profit is made based on it. Based on it, you can profit between 3 to 4 posts, between 2.5 to 4% in one trade. This trade here that you see in front of you is not that common, and you may see it on average per month, 2 or 3 times, maybe even one sometime. But such a trade will be won 20 times, 19 times, or 17 times, or 18 times. Yeah, it can often be break even. In the end, you don't make a profit but earn zero. When do you set break even? In this case, you set the break even when the entire cry is transmitted. I apologize. When transferred, consolidation. Then you set the break even at the lowest level of consolidation. What does break even mean? Break even is where it's quite simple to explain. I don't know how to define the easiest break even. So break even is your hedge against losing a trade. Let's say you entered the trade here. In this place here, where the beginning of the red zone is located. This is usually where you will enter the trade. And the stop loss is there, which means that if that stop loss is transferred, you lose 1% and 1.2 or 1.5%. But if this consolidation is transferred, you will set the break even here, there. Why here? Because we know that a cry may be forming, so that we don't end up cry, transferred, break even, and continued in the uptrend. The break even will be set below this low in this area here. Someone will then ask the following, since now this is like an audio book, but that way, because I don't write it down. If I started writing these down, they would stay for a very long time. Someone will ask, why can't accumulations form in this part? And then in the end, an uptrend happens, but it would not be valid. Why? Because in this part, there would be 2 preliminary supports. So there cannot be 2 preliminaries in the accumulation support, which means that here, if break even happens below this consolidation, we would lose about 0.25%. Break even is shuffled. Then when the whole piece is moved, break even is set at the point of entering the trade. And this is one of the best trades in your Forex career that you will have. You will see such a trade every year. Come on, I'm going to put the minimum 1 so that it is reinforced with the maximum 1. In 1 year, you will see a trade like this with normal market tracking. Come on, I'll put something at least to ensure it. Between 10 times on Forex, between 10 times and 20 times. So you will see such a trade. Based on it, you can profit a lot and you can earn a lot. If you trade livestock with the market, you will see this kind of trade maybe 1 in 5 times a year. Such a trade will eventually bring you profitability, which is, let's say, 5, 6%, and that's great. Or 7 or 8% or 10% actually, about 10%, because the risk is always 1.5%, then it will be about 10%. Strahinja asks the following question. I was just going to ask you if it's a good thing that my entry is on consolidation, because if it falls, B will break even, and I would enter the cry, then it would be a bad entry in the sense of B. Yes, exactly like that, exactly like you said, Strahinja. Mickey wrote on which time frame it would be best to watch this kind of fract. Now the question on which would be the best, but here I will give you the most professional answer, Mickey. Whatever time frame the question gives, whatever 1 minute, 5 seconds, 5 minutes, 1 day, 4 days, 1 week, 43 minutes. Just don't let your 100+ zone have less than 4.5 pips. This is said briefly like this, but it has a much larger explanation. It must not be below 4.5 pips because of the spread, because of the strong volatility, because if 4.5 pips can be transferred very easily, 100+, you don't even see it. You don't even see that transfer in your brokerage house. Candlestick actually, yes, does not exist. So whatever time frame there is, you can trade. Just don't let it be below 4.5 pip 100+ zones. That is the most correct answer. Stefan wrote what can be seen in 5 minutes. If the fractal is good, it will be visible for 15 minutes. Exactly, Stefan, congratulations on that. Sometimes the fractal that we see for 5 minutes will see the truth in one day. Can you believe it's true? So we see a 5 minute time frame. We see the algorithm on the 5 minute time frame, and then we enter on the 8 hours, and we see the same again algorithm. And now I will prove it to you. That's why people get confused a lot, why they worry a lot about the time frame. People don't know, so they don't know much about it. Most of the time, it is not like that. So there is no such thing as 5 minutes TF, 1 minute TF, 7 minutes. It is viewed differently. It is observed on the basis of pips in the 100+ zone and not on the basis as now. There is one picture every 5 minutes and there is another picture every 8 hours. Mostly yes, but when you look at 5 minutes and 45 minutes, it will always be the same picture. So don't think like that in your head, please. So look at it differently, watch it in more detail. Only fractals mattered. Now we're going to look at the 5 minute time frame trade on Google that happened a long time ago, which was completely valid. Now we will see what kind of clothes it was. Yes, that's it. Look at this frame. This is a reaccumulation, which you cannot see very clearly now, but we will do it this way by marking with this structural part. It will be an overwhelming support. Buy and climax, secondary test, then the lowest level consolidation. And later we will see a cry that here has buy and climax, secondary test and consolidation, but does not have preliminary support. That is the rule that we will do the same. The preliminary support it does not have to exist in the cry, but it must exist if it is not a cry. So look at this on the 5 minute time frame as it looks. It looks pretty good. I don't know if we could get into the 4 minute time frame, but look, we see it at 4 minutes. Let's go into the 8 hour time frame. Take a look at, again, we see exactly the same picture. Let's go into the 4 hour time frame. Even better, but that's it. Again, we see the same picture. Let's go into the 4 minute time frame. Great. Again, we see the same picture. So the picture didn't change no matter how much we looked at the larger and smaller time frames. Well, that's the relationship with time frames. So did you understand me, Mickey, what I answered you? Only that after you sent me the question, I didn't get feedback from you, so I'm not sure if you understood it. Yes, Stefan wrote that it is not expected. Mladen also supported him in that message. However, now you can see what it actually looks like. So it's completely different, and everything you learned in Forex before and what you watched on YouTube is probably not true. Maybe someone watched correctly and learned a lot, but in most cases, it's not correct. It is exactly like that. So How does it work when the time frame is smaller? Let's move away, reduce the width of candles. That's right. Like that. Then it's really exactly the same picture. Yes, we will be working on this a lot. So that would be the end of this lesson. We covered a lot of important information in this lesson, information that you probably couldn't remember from this lesson. I couldn't remember in this lesson either. It was quite difficult for me to remember before, so I had to write down a lot. I hope you're also taking notes when you're learning this now that we're doing it. The book I will present on the 1st of October is quite good, and I am glad that most of you have bought it. So I'm going to stop recording this lesson now because we've covered a lot of the essentials.